Hi, this is Mark from Altcoin Buzz, and we're going to take a look at Bitcoin today as we wrap up this week and see what's going to be potentially coming in the next week as we get to these very critical areas once again on Bitcoin. So let's get started. Okay, we're on the Bitcoin USD one-day chart, and if we take a look at the chart, you can see two ascending triangles here. One that started back at the original capitulation in December. That's the larger ascending triangle. And then you've got a smaller one up here that we're looking at. This has been starting since the middle of February. The reason that we're looking and paying more attention to this smaller ascending triangle right here is because this larger one seems to have been invalidated or untested. It's unsure, rather. Let's just say that. We had the original start back here. We've tested this lower ascending support line once, and we haven't tested it again. So this is a very weak trend line on the bottom. What's more important is this trend line that we have going on right here, where we tested it 1, 2, 3, 4 times here, testing the resistance area for a third time within the small ascending triangle. And this is the area, because it's about 75% complete, this is the area that we'd be looking for a move. This is where Bitcoin really needs to break out, because if it doesn't break out from here, then a rejection at this resistance point that we're at right now would then most likely break us through this support that we have on the smaller ascending triangle and take us down to retest the support on the larger ascending triangle. A couple things happen if that were to come into play, and we'll take a look at what those are. Now, if we end up making a breakout from here, and that would be a measured move of about 13%, if we use this opening of the triangle that we're at right here, that would be a move of about 13%. That 13% would then take us up to try and test the upward resistance of the larger trend. This black line that you see here is drawn off the tops of the 2018 peaks. So we still have, if we just continue that line through, we still have that as potential resistance for us in a long-term trend. We'd have to break above that for the market structure to be broken. Currently, we are still in the same market structure that we were last year until we break out of this resistance line that we have going on right now. But that, if we were to get a breakout and get that 13% move, we would theoretically be testing that line. Now, here's the other positive to that if that happens. This capitulation down was pretty much a straight path down. We had this one area where we tried to consolidate for a very short time. And really, there's no price action at all until we get up to about 5,500. Now, the thing to be aware of is that we will develop new resistance levels as we start to move up to get back to that $5,500 price point. We will find some new resistance areas. It's just natural to backfill after a capitulation like that. But those resistance levels are going to be very weak and will act more like consolidation areas versus resistance most likely as we continue to move up to that $5,500. If we pull up our moving averages on the daily, you can see, and some of these colors are off, and I apologize in my description. I will clarify for you right now. We've got a 100-day moving average in the gold down at the bottom, or the brown, whichever one you want to call it. We've got the 7 on the red, the 30 on the purple, a 50-day on the pink. The green is actually our 20-week, our moving average of 140 days. So that equates to about a 20-week moving average. You can see that we're above that. That is a very critical point that most people have been watching. We want to stay above that area. As our 100-day moving average starts to flatten out, we will find the intersection with that 140-day, 20-week moving average here at some point in time. Those two will eventually theoretically collide unless we get another capitulation down. So as that 100-day starts to flatten out, to me that becomes the very kind of critical area, or the last stand, if you will. It's also the area of the point of control on the VPVR, so the volume by price range. So we know that's where the point of control is, and that sits right at about 37.50. If we break below the 37.50, that will break our market structure, and we should start getting pretty nervous, because a breakdown of the 37.50 puts us at risk very quickly of hitting those lower levels, certainly testing that $3,000 price point at some point in time again, and potentially taking out the support that we need to stay above the 3,000 and putting us into some sub 3,000 price points. On the one day, if we look at the Mucca Cloud, it's very positive. We're trading outside of the red cloud. We've got a green cloud forming. So our fast moving averages have started to cross over. It's forming a green cloud for us out in the future. It's a very thin green cloud right now, but theoretically that's where our main support lies at Bitcoin this point in time. You can also see the bottom of that cloud sits around that $3,700 range. So confirming a breakdown below that, not having any support to continue through with our move that we have going on right now. We're still trading in that blue area box in that range. We need to get above there. A close above 4,300 would make me very happy with a settling in support of 4,200. Until then, my mind really hasn't changed. The other thing that we have going on right now is the lagging span is trading at about equilibrium with price. So we're consolidating right here in this area. And if that lagging span can get above the price point, if we can start getting slightly above that price point that we're at right now, then I'd be even more bullish, because that is a very bullish indicator, but it's not showing up on the one-day Ichimoku cloud at this point in time. So let's shrink down those candles a little bit. Look at the 3-day. You can see that larger ascending triangle a little bit better here. Again, we're focusing on the smaller one at this point in time. So with the lagging momentum and this resistance that we see happening here, I could see us, because we've got the smaller ascending triangle that theoretically would be making a break to the upside or downside at this point in time because it's 75% completed. What I'm seeing with momentum, unless we get a huge amount of volume that comes in tomorrow and we just shatter through this resistance, which it doesn't look like we're going to be able to do because we've got bearish divergence on the volume going on like we looked at last week. So a rejection once again of this resistance would then potentially take us down to the bottom of the ascending triangle to either retest or break through and take us down to the bottom side. Now, it's very clear where the breakdown from here would be, and that is at that prior swing low, which again is at about the 3750. The momentum indicators on the 3-day are actually cooling off a little bit, while there's still room to move on the daily, no doubt. The daily charts show momentum still left. Although trying to turn over, they still have momentum left. The 3-day is starting to cool off. So we'll have to keep an eye on that. Now let's just take a quick look at the weekly. If we take a look at the weekly, we are still watching this RSI right here at the very top. We do have a gap there. We'll take a look at it, but you can see when we get the crossovers, we've looked at this before, but when we get the crossovers on the weekly stochastics, we get these large moves down every time on the bear side of the market. If we were in a bull market, then the tops of these would be very nice consolidations and finding new support, and we'd make new moves to the high side. But because we're on this bear trend still, and you can see this is that black line where we've been rejected all through 2018, just continuing down, and this is an area that we probably will retest at some point in time if we get out of the resistance block that we're in right now. If we can't, if we get rejected, we break down from this ascending triangle. This is nothing more than a bear flag, and we continue down. But you can see by looking at the chart right now, if we break to the upside, we still have to test and break through that resistance line that we have from the 2018 tops. The other thing about this is that if we close below the 3950 price point, that would be a very strong indicator in my mind. Then we'd have to come back and look at the stochastics and see if that gave us a signal cross, because we are so close right now to getting a signal cross. That price point would most likely, if we do go back down and retest the bottom side of that ascending triangle, would take us into a crossover to the downside, the bear side on the weekly stochastics, and then that would theoretically give us an indicator that the lower price points are now coming. So if we get there, we'll take a look at it and see what's happening. But if that cross happens, that's going to be a big move, not a small move. That'll be a big move if we get a stochastic crossover on the signal from the weekly. So to wrap this thing up, last week we had a 7% swing in price point from the top, the highs, the lows. We ended up closing 3% above the prior week. So we had a nice move up. If we get the 3%, that'll take us up to the $4,200, $4,300 range. We'll retest that upper resistance from last year and see if we can't find support there, and then that potentially gets us on a reversal. That gives us a signal that we're on a reversal. Until then, we are just in a continuation of where we've been. Right now, I think we do need to test the bottom side of that ascending triangle first. I don't see us breaking through the resistance this week that we've had since this initial capitulation. Then you start watching all those lower areas of support to see if we're able to hold up on them. So that'll wrap it up for today. Don't forget to subscribe and hit that like button. Also follow me on Twitter so that you can get this technical analysis when I don't have a chance to get to a video. And then hit Altcoin Buzz IO up so that you can check out all the fundamentals that our journalists write throughout the week. They do all the research for you. They report out on it, but some very good, solid information for you to take advantage of there. And until next time, may all your trades be good ones.